Well, joining us now is Larry Shover, Chief Investment Officer at SFG Alternatives in Chicago. Larry, hello to you. Great to have you back with us. Certainly when it comes to that overnight session, we saw the energy players for once leading the gains.
Yeah, it really was steady all day long. And, you know, we're seeing stocks draw, global stocks drawing, just not drawing quick enough, not nearly quick enough to meet my year-end forecast, 55, 57 a barrel. Just not going to happen. Rig counts are down, but you know, I don't think many people are really looking at the compliance or lack thereof of compliance with OPEC and non-OPEC because they're producing quite a bit. And I do think shale in the second half of 2017 is going to surprise to the upside, just given the investments made in the first half of 2017. So I'm still bullish on crude. I just don't think we're going to see $57 a barrel like I forecasted back in January.
With that in mind, I mean, looking at sort of your portfolio at the moment, what is your allocation sort of between the assets and considering oil and the commodities within that as well?
Yeah, I think right now it's pretty simple. I continue to be overweight Eurozone banks. I still think that's the place to be. I do like commodities, generally speaking. I think we're going to see a dollar that's going to fledge. It perhaps will retrace quite a bit, just given the interest rate differentials we're seeing between Europe and the United States right now. So quite bullish on the commodity space. You know, oil, I still think we're going to see low 50s, not high 50s, but overall that's where we're going to be. And I do continue to be to underweight the U.S., just thinking that we're closer to the end of a cycle than we are in the beginning of a cycle.
With that in mind, in terms of some of the elements that you're looking to, of course, we do have second quarter earnings set to feed through. What are you looking for here? We've had suggestions previously that it is now numbers, not feelings, as we head further into 2017. In terms of an insight of realistically where Wall Street and its corporates are headed.
Yeah, you know, I do think the second quarter earnings season is still going to be a tailwind for the U.S. market, at least holding it up. I mean, consider global PMIs were very strong. Industrial production numbers were all very good. But I do think earnings per share multiples are increasing or consensus expect them to increase at a rate that I just don't think is going to hold. So that said, I think the second half of the year, it's going to be trouble. I think there's going to be consolidation in the market when you look at the fact that you know, the momentum figures in the economy have not been as sharp as they have been in the first half. I mean, do I think we're going to have a major correction? Not at all. But I do think that's something to be worried about, that earnings per share estimated to be $2 to $5 per share in the second quarter. They're looking to double that for the third quarter of 2017. And I just don't think we can do that. That with the interest rate differential, you're starting to see a bigger divergence between rate expectations and earnings expectations. So I think that's going to play into it as well. So I think a consolidation mode is well on its way after the second quarter reporting season.
Just to that theme of rising interest rates, we've had a bit of commentary coming through this week regarding taper tantrum, particularly if we take a look at the movement that we're seeing in Treasury yields at the moment. Are you a subscriber to this taper tantrum theory?
Yeah, you know, I tend to be different on interest rates than most. I mean, I do think there's going to be more pressure on yields going down than they are going up. It is true that we have not seen a taper tantrum like we saw in 16 or 13, but I just think when you have inflation on the downstroke as it is, the debt levels the way they are, I just can't see interest rates going much higher than they are now. And so it sounds like I'm speaking out of both sides of my mouth. I'm not. I mean, I just don't think that interest rates will be I think like 2.6 and a 10-year yield in the U.S. is the high end, and I do think we'll be closer to 2.25% by the end of the year.
Larry Shover, we will have to leave it there. Great to have you with us. Thank you so much for your insight today.
Thank you.